we have the pitfall number 3. And we assume the project, and project is called C. Project C, we have like this. 1,000 is investment. Then in the year 1 we have, 1,000 is on plus. Then we have second year on minus 3,000. And then on the second year we have as well an income. So we receive, we pay, we receive. All right? So we could see, that how the project looks like. And now we continue, because I would like you to calculate the NPV, right? Please try to calculate the NPV. And we could use a number of different percentages, these interest rates, because, for example, at 10% it is 339. But what it is at 3, 5, 15, 20, 35, and 50? Could you please calculate? This is a very interesting subject. So, yes, I even gave this sort of missing places, and I know it's a quite tedious work. So, I hope for your cooperation during this lecture or later during the seminar in fulfilling the numbers and giving me the really good answer, right? Because we are looking, I will try to remind you, we are looking for the rate of return that would give us NPV at 0. But to make it a bit sort of maybe clear, we have a simpler project. I have project A and project B. Project A is in the period 0, it's 4, then it's 7, and then it's 4, right? And project B, it's -1 plus 7.2 minus 7.2. And could we make the calculations for the IRR? And could we give any answer about these projects? It's very interesting. Actually, these projects are pretty simple, but when we calculate that, then we come to the conclusion that it looks like this. Perhaps it's not the best view possible, but I hope you see it. So maybe let's concentrate on the project B. Project B actually is this one that already we know. It has multiple rates of return. Yes, because it crosses this horizontal line twice. So it has inevitably 2 IRRs. But then project A is much more interesting, because you see it never crosses this 0 line. Interesting? Interesting, because it never crosses. So at any point NPV is not equal 0. So what could we do? We have calculated for the project A all possible internal rates of return, and always it's a positive figure, never crosses 0. So how to deal with this particular problem? Yes, there are cases when it's impossible to find the rate of return for which the NPV is 0. Oh, sorry, I just clicked it. They are impossible to find where it's 0. So in this case, there are projects C and project A. In the result, there are cases with no IRR. Let me climb back for a moment to that, because I gave you this example, this project C, and I hope when you calculate, then you will find that at any of these NPVs, they will be positive. But you have to calculate and to find it. They will be positive, and then they will sort of go in some kind of a curve. So you will see after that they will never be zero. And if so, if they are never zero, NPV is never zero, then there is no internal rate of return. It's very, very difficult problem. As well, when we look back on these figures, and we have this on the graph, it's more visual. Obviously, we could say that this NPV for different rates of return is different, but still, it's never zero. It makes us believe that we cannot solve this problem. By the way, there is a kind of a hint that we could use. Let's have a close look on the project B. Yes, we have the project B. And this is this one with -1, 7.2, -7.2. And we have found that this project has 2 internal rates of return. Fine. We should know that this one has 2 because of what? Who knows? Yeah? I'm listening to you. You shout. Yes. The sign changed twice, from minus to plus and from plus to minus. So already we should know we should not calculate this at all. I mean, we did it for the purpose of the exercise, but in real life. And as well, what we could say about project A? What happens there? Anybody has a good idea? Yes, it's 4 minus 7 plus 4. So it means it changed the sign twice. So more than one. Already we should not do it. As well, this project, where is this one? Project C is like this. How many the sign changed? Yeah? Twice. Exactly. Twice. So if we see it from the start, what could we say? We say this. If the sign changes more than once, don't even calculate the IRR. Brilliant. So I go down to the end of this part. Again, it's just too fast. So, summing up before the break is that we have these pitfalls, and we know what we are doing: multiple IRR or no IRR. Be careful with the changes of this sign.